All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us here today. If you've been with us all day, it's doing my job. I'm supposed to make you stay. I get paid to make you stay. So let's take a look at corn. That'd be a good place to start. What are we doing over there? We're up 19 1/4 cents to 702.5, 4 cents off the highs. March is up 17 cents to 708, and that too is about 3 3/4 off the highs there. So obviously a good corn board. Soybeans, what do we got going on over there? 12.5 cents higher in that Nove to 13.79.5. Well, what the big deal is that we were almost 20 cents higher than we are right now earlier. We almost made it through 14. Jan's up 11.5 cents to 13.90 3/4, but we do have March at $14 even right now, up 11 cents. Moving right along to the wheat. What do we have happening in the Chicago wheat market? Cue the fireworks, please. 67.5 cents higher in that D's contract, 9.47 3/4. While March is up 65.5 cents to 9.60.5. So there you go. Really significant gains when it comes to wheat. Hard red wheat in Kansas City. The old HRW down in KC is up 65.5 cents. That D's contract. Last is at 10.34 1/4. We got a 10 handle in front of it, folks. March, 62.5 cents higher to 10.28 3/4. The first 4 months in hard red wheat down in Kansas City are all in the $10 range. All right, spring wheat in Minneapolis. That too is at $10 now, 15 3/4 cents higher. 10.18 3/4 is last. March is up 43 3/4 cents to 10.19.5. The first 4 contracts there are now all with a 10 handle in front of them. And then finally, even cotton's higher today. Limit up higher, actually. And March is making a run to being limit up right behind it. So we'll have to wait and see there. But we're 400 points higher in Dees. 88.23 limit bid. 88.23 is the high. All right. Let's bring in our next guest analyst, Todd Horwitz from Bubba Trading, and he's going to be joining us from Las Vegas. Thank you very much, Todd, for being on the show. Well, these binary events we keep waking up to, which is either you're right or you're wrong, it's up or down, it's black or white, man, they're hard to hedge.
They're hard to hedge, but they're easy to hedge. They're hard to stomach. The hedge part is easy because you can certainly put yourself in a position to benefit on either side. But the action makes you want to, makes you need the little bag they used to give you in the airplane. Again, it's a market that is challenging. And of course, today, with the banks closed and a lot of the action not taking place, it makes it even harder. We have these half holidays, which the markets are open, the banks are closed, makes it a lot more challenging. And look, I think that commodities are going a lot higher. I think that maybe we're finally realizing that, or maybe this is just another temporary blip. But basically, every week we've closed higher than the week before, and it looks like the run is going to continue.
Can you imagine where we'd be if we didn't see the dollar strength that we're seeing?
I can imagine, yeah. But one thing big for sure, Scott, is we know that there's a shortage worldwide, and we are the supplier, and we do have goods. And no matter what the dollar is, people want to eat. That's one thing we know for sure. They're going to eat, and they're going to pay whatever it takes. But yes, we'd see a lot more speculation and a lot higher prices should the dollar be a lot lower.
I don't know if you saw it, but I don't know, on my screen, if we go to March wheat in Chicago, March wheat's trading around 960 right now, right? Yesterday, Friday, somebody bought 225 of the March $25, $30 call spreads, and they bought a lot of them. 225. They paid 7/8. But that's a significant bet. Are you in that camp, or is that just a nuclear war hedge?
I think that's just somebody who's taking a shot, and they took the wrong shot as far as I'm concerned. There's a lot better ways to do what they did for a lot cheaper. But listen, I could see a $15 handle on wheat before the year's over. I could see a $10 handle on corn. I could see a $20 handle on beans. So again, I'm in the bull camp. I just don't know. 25 would be kind of ridiculous, but it certainly could. Listen, anything is possible. And if we look at the price of crude oil, for example, that is triple what it was 2 years ago, and then take that and look at what's going on in London. It's 5 times what we are paying for it. So
you're right.
Certainly anything's possible.
Anything's possible as long as they can shut down the world's greatest economy of all time, and you can get oil trading at minus $40 a barrel. That's how I know anything's possible. All right, stay right there. We're going to go away. We're going to pay some bills, and we're going to come back and talk more with Todd Horwitz, Bubba Trading in Las Vegas after this. All right, welcome back to Market Day Report. I am the Cow Guy. The Cow Guy is a cheap segue into looking at these live cattle markets. Let's take a look at Chicago live cattle. We're easier here today. Let's see. Dees is off 92 cents to 147.12. We've got Feb off 85 cents to 150.90. They're both trading closer to the lows of the day, but just kind of heavy considering what's been happening as far as market action out there right now. Feeders are the ones taking it on the chin. We've got Nova off $3.50 to 172.12. That is a new low, ladies and gentlemen. Jan's off $3.10 to 173.50. And that's 15 cents off the lows there. So feeder cattle limping in towards the middle of the day. Not good, all right? And then finally, let's take a look at lean hogs and see what's happening there. Well, we've got Dees up $2.60, right? That's pretty good. 79.75, not bad. And that's pretty close to the high of the day, but only by about 12 cents. And then we've got Feb up $1.35 to 81.30. Let's bring back in Todd Horowitz. He's in Las Vegas. He's with Bubba Trading. All right, Todd, I got 60 seconds. What are your thoughts when it comes to the livestock?
I think the livestock is going to be pretty stagnant going forward, Scott. We'll see some moves either way. Now we're seeing corn. Obviously, corn's higher, feeders are lower. I think they found a fair trading range in which they'll trade within, let's say, 5 or 6 points, top or bottom, from where they are, all three. I don't think there's a lot there. I think it's really going to come back down to the price of crude and what's going on in the economy. And when things are tougher, there's going to be a less demand for beef and a bigger demand for hogs. And when it eases, there's going to be more of a demand for beef. So I don't think we're going down. I just don't think there's a lot of room to the upside. I think we're pretty near the highs of where we're going to be, with barring any emergency.
Yeah, nobody's making it any easier on anybody either, because we've got CPI and PPI this week as well as that WASD report. So, but look, it's just a bad week to misplace that seatbelt. Make sure you have it. I really appreciate you coming on. That's Todd Horowitz, Bubba Trading in Las Vegas. We're going to bring it back to
guys.
Nash Vegas, and I can throw this over to Janet.